Hi guys, FSPreneur Global Forex Trading Academy brings you Forex Mentorship course with Prosper Okonkwo. From the beginning of this series, we've been going through different strategies when it comes to smart money trading. And today, our focus will be on powerful setups, confluence, time frame setups, daily checklists, marked up charts. Now, one of the setups we are going to be looking at today is a turtle soup. Turtle soup is the same thing as stop hunt. When you hear turtle soup, we are referring to stop hunt. Turtle soup is a movement which used to neutralize liquidity, that is stop losses. It is a false breakout above or below the zones where there is liquidity. The movement used to neutralize liquidity is turtle soup. It is the same thing as stop loss. Sorry, it's the same thing as stop losses, all right? Turtle soup short. This is a fake break above a zone where buy stops liquidity exists. A stop hunt to take out liquidity of sell orders. A stop hunt to take out liquidity of sell order, which is buy stop liquidity, is referred to as turtle soup short. And this stop hunt issues a short setup. That is a setup to take a short trade. Turtle soup long. This is a false break below a zone where sell stop liquidity exists. This is a stop hunt to take out the stop losses of buy orders. To take out the stop losses of buy orders. And this stop hunt issues a setup for a long trade. It issues a setup for a long trade. How to trade turtle soup? The price usually sweeps 5 to 20 pips, even more, above or below a point where liquidity exists. After price sweeps the point, enter a trade against the movement used to sweep stops, with minimum 10 pips stop loss in lower time frame. To trade this, there has to be a stop hunt. There has to be a stop hunt towards liquidity, either buy stop liquidity or sell stop liquidity. And this stop hunt is always in the range of 5 to 20 pips. Sometimes it could be more. Then after the stop hunt and a reversal is being issued, you can take the trade in the opposite of the stop hunt. This is a graphical representation of the turtle soup. We have here a previous high. A previous high. Then price went up, took out the high. Right, price went up, took out the high, and the range of the hunt was about 20 pips. And afterwards, see how the market made a swift movement to the downside. Here's a chart representation of this. First, we have an initial high. And when price went down, a stop hunt was done to take out this high. And the range of this stop hunt here is 20 pips. Afterward, a trade was issued to take the market short with a minimum stop loss of 10 pips. This is your turtle soup short. Then we have the turtle soup long. This is a stop hunt for buy orders. We have our initial low here. Then a stop hunt to the low, which is about the range of 9 pips to take out the low, and a new low was formed. And the market made a very wonderful movement to the upside. Going forward, we are going to be looking at a combination of different setups. Here, we're going to be looking at the combination of stop hunt, break of market structure, return to order block. At the beginning of this series, we'll be talking about break of market structure, change of character, failure swing, order block, stop hunt. All right. So we're going to combine a trade setup. We are putting everything we've learned together into one. We're going to combine a trade setup. And the first setup we're combining is the stop hunt, the break of market structure, then return to order block. How do you trade this? First, a stop hunt has to occur. A stop hunt has to be used by the market makers to neutralize liquidity. Then second, there must be a break in market structure, which confirms the stop hunt. And of course, when this break of market structure is being in motion, another block is created, which is confirmed by the actual break of the market structure. Then a return to the other block gives you your entry, whether a buy or a sell, depending where price is coming from. Here we have an initial low. Initial low, then price came down, a stop hunt to take out the previous low. Then here we have another block, then a break of market structure. This movement up broke this structure to the upside, then we look for a return to the other block. But look at this, before the return to the other block, the cost of breaking the market structure, a failure swing was left here, which is what we attract price to come back down. Now look at what happened there. Price came down here. It didn't tap into the other block. It ranged around there until it created another high here. Then return here to tap on this other block. Now tapping on the other block gives you your entry for a buy. Now when you get your entry for a buy at this trade into the other block, you trade high to take out this high here, which is your profit target. So your profit target will be at this region here as your take profit, but the aim is to take out the initial high created towards your left-hand side. Now, one thing else I want us to take note of is when it comes to a return to the other block, most times it is always difficult to get entries because it's always a tap on the other block. Only on rare cases will you see price actually trade into the other block. That is why I recommend the use of pending orders. The use of pending orders for entries. What I do is this: I take a pending order about 3 pips above the other block, then another pending order about 50% into the other block. All right, take my entry between these two. Either one or two of these entries are going to be picked up, and my stop loss will be 10 pips below the other block. All right, here is for a bearish movement of the same stop hunt plus break of market structure, then return to other block. Now look at what we have here. We have equal highs here. Equal highs is what we have here. Then a stop hunt took out the high. Then we have a break of market structure. Break of market structure gave us another block. Then a return to other block confirms the entry. Now in this case, you can see that the price actually traded even way beyond the 50% of the other block before returning down. I'm getting an entry for a sell from this point. Your profit target should be on this low here to take out this low as your take profit target. Here we have another setup to look at. Now this setup here will be for failure swing, break of market structure, and return to other block. Failure swing, break of market structure, and return to other block. We already know what failure swing is. Failure swing is basically when price fails to take out the previous high or previous low, which simply shows a sign of weakness and a reversal in the opposite direction. All right, so let's look at the chart setup to show us that. We have our initial low here. Then price failed to take out the low at this point. This is our failure swing. All right, our failure swing. Then look for a break of market structure. This high is taken out. That's break of market structure. Then because of this market structure being broken and other block we have here, then a return to this other block gives you your entry for a sell. sorry, for a buy, then your stop loss about 10 pips below here, then your take profit to target above this high as your take profit. So target above the high as your take profit. This is for a bullish run, a bullish failure swing. They will have a bearish failure swing. Bearish failure swing plus break of market structure, then a return to order block. What do we have here? We have initial high, then price fails to take out the high at this point. Then you have the failure swing. And to confirm the failure swing, there has to be a break of market structure. So this low, the break of this low confirms the failure swing. And the course of the breaking the market structure, and order block was issued around here. We have an order block. Then the return to the order block confirms your entry for a buy. Sorry, confirms the entry for a sell with your stop loss about 10 pips above this. Then for your take profit, you target this low for your profit. So your profit will be at the time price somewhere around there. Your take profit. Confluence. Confluence. Confluence is very important to increase the chances of winning trades. A trader needs to have at least 2 factors of confluence to boost confidence to open a trade. Now, when trading, you have to consider a lot of things. A lot of factors has to be put into consideration. 1, 2, or 3 factors or setup has to come in handy or appear at the same time for you to confirm a particular entry in any direction. And what are some of this confluence? Higher time frame analysis, trade during London Open, trade during New York Open, refine high time frame key levels into lower time frame entries, combine setups, trade during high impact news. So you start from a higher time frame analysis, which you refine to lower time frame. Now those lower time frame, you now look for entries during either London Open or New York Open. You combine all of these setups together, it gives you a very good probability entry. Higher time frame analysis, lower time frame entries. Now, most traders find it difficult combining these two. All right, combining higher time frame and lower time frame, they mix it up. But the truth is that it is very simple. For you to take a trade on a lower time frame, you have to start analysis from a higher time frame. So you start analysis from a higher time frame, refine to lower time frame, then use analysis of the higher time frame to take a trade on your lower time frame. Now, the higher time frame key levels are higher time frame order blocks, higher time frame liquidity pool, higher time frame break of market structure. So you start your chart analysis from mapping up order blocks on higher time frame, starting from daily down to 4 hours, 1 hour, then you refine to your lower time frame. Then you also map out liquidities on these higher time frames, talking about daily time frame, 4 hours time frame liquidity, and also a break of market structure in this higher time frame. Now, when you come to lower time frame, you take trades with respect to the analysis taken from the higher time frame. You try to put this together for you to get a good trader entry. Time frame setups. Time frame setups. These setups are for 3 different categories of traders. That's for swing trading, for short-term trading, then day trade and scalping. Now, for swing traders, swing trading, when you have the intention of holding positions or rolling over your trade over a couple of days or weeks, your time frame, your higher time frame analysis has to start from weekly time frame. From weekly time frame, you refine to daily and 4 hours time frame. All right, then for your entries, you can use between 1 hour, 30 minutes, 15 minutes, or even 4 hours time frame for your entry. Now, I myself, because of the fact that I don't have the luxury of time to sit on my platform every time to trade, I prefer leaving my key levels at 4 hours, right? At the 4 hours time frame. When I define my order blocks, liquidity, all right, I hold a high esteem key levels of the 4 hours time frame because this time frame seems to hold price almost at all times. Then I look for my entries. I use between, I think my minimum time frame for entry is 15 minutes. 15 minutes. It's all depending on where I see the entry trigger. 15 minutes, 1 hour. Most times I won't get my entries on my 4 hours time frame, as the case may be. Then for short-term trading, your high time frame analysis starts from the daily time frame, then refined to as low as your 1 hour time frame. Then you pick your entries using 30 minutes, 15 minutes, and at times the 1 hour time frame. Then for the scalpers make use of the 4 hours time frame to 30 minutes time frame for their analysis for the key levels setup, then entries from 15 minutes to as low as 1 minute time frame, as low as 1 minute time frame. But remember, irrespective of the setups where you get your setups, your entries from, you'll have to enter your trade during London Open. During the London Open, this is when the high of the low of the day is being set during the London Open. Afterwards, a setup, you look for setup between 8:45 to 10:45 GMT +1. Okay. Then at times also, the after London session, a retraction of the London session occurs during the New York Open. And most time, New York Open goes out to take out the highs or the lows that were set initially by the London session. So these two, London and New York Open, are the key moments when you look for entries. All right, now on these sessions, you look out for price retesting, high levels, high time frame, key levels. And you can also trade on high impact news events. Yes, you can trade high impact news events when you master to read your chart and map out these key level, most especially the higher time frame key levels. Because during high impact news effect, higher time frame key levels are the levels that market makers reference to when they move the market. Now we're going to be looking at some trade setup. First, we'll start with the swing trading. Look at what we're going to do here. We're going to get a setup on the higher time frame, then we'll look for the entries on the lower time frame. This is a weekly chart of GBP USD. We'll have an initial low here. Okay, then a stop hunt. A stop hunt here. Now this setup, let's look at this setup on a lower time frame. This particular marked up area of stop hunt, we're going to look at this weekly stop hunt and see the setup it builds on lower time frame. And when I mean lower time frame, I mean the 1 hour time frame. Now that entire stop hunt here, all right, this is how it looks like on 1 hour time frame. This is how it looks like on 1 hour time frame. So let's say the entry it gave up on the 1 hour time frame. On the 1 hour time frame, it gave us this setup, initial low, stop hunt, break of this high, break of market structure. And because of break of market structure, we'll have another block somewhere around there. Then the return to the other block confirms our entry for a buy with take profit targeted on this high as take profit. Then you have your stop loss minimum of 10 pips below the other block here. You can see that we first saw the view setup on weekly time frame. Then we came to 1 hour time frame to get a perfect entry. Now let's look at another one. This is a USD card daily time frame. Daily time frame gave us an initial high. Stop hunt, break of market structure. Break of market structure, we give us equal lows. All right, the return to other block here. Return to other block here gives us your entry for a sell. Then when we sell, the take profit is geared towards taking out this liquidity here, which is this equal lows. So your take profit should be at this point when the liquidity, this equal lows liquidity has been cleared up. Now this build up setup here gave us an entry on this daily time frame. But you know that on daily time frame means that every candle took exactly 24 hours to form. And you may not have the luxury of time to wait for that long for it to get an entry. So you may have to go to a lower time frame to get a very good entry on your lower time frame. So this is the same chart build up on a lower time frame. I think on this lower time frame, on the H4 time frame, this gave us 2 entries. Now this other block here, all right, we're going to look at it on lower time frame, precisely 4 hours time frame. This is it. This is how this looks on the 4 hours time frame. That's top point to have here. That's exactly how it looks here on the 4 hours time frame. Now back to this time frame here. What do we have? Initial high, stop hunt. All right, stop hunt, break of market structure. This low was broken to this point, which gave us equal lows. Then Wolf return to other block. We have another block here, which is this week. Another block here. Then a return to this other block give us our first entry for a sell. Give us our first entry for a sell. Then if you look closely, you can also see that this entry gave us an initial high at that point. Then when this happens, price came down. The first entry was already in motion, price came down. Then return back or did a stop hunt to this low, to this high rather, a stop hunt to this high, Then a break of market structure. A break of market structure gave us another block here, and a return to this other block gave us a second entry for a sell. Remember, the first entry was still in motion because for the first entry, the take profit is somewhere around here. It's somewhere around here for the take profit for the first entry. In the second entry, the take profit will still be at the same point because as market proceeds down eventually, it's going to go down to take out this equal liquidity here, this equal loss liquidity. So take profit will be at the point when this liquidity is being taken out for both the first and the second entry. Okay, here we'll look at that for short-term trading. Look at that for short-term trading and see how it works. Now, for short-term trade, this is a GPUSD H4 time frame. We have initial high. A stop hunt took out the high. All right, a break of market structure. And they have a other block here. All right, so a return to the other block gave us an entry for a sell. With your take profit targeting this low being taken out. And this is on H4, which give us a valid setup and complete entry. But let's look at this same build up on a lower time frame, say the 15 minutes time frame. All right. Now the 15 minutes time frame, this stop hunt we have here, we're going to look at what it looks like on the 15 minutes time frame. In 15 minutes time frame, that is what the stop hunt look exactly like this. All right, it covers the entirety of this. All right, the stop hunt. This is the initial high. Then that is the stop hunt. But inside that stop hunt, we have a setup. We have the initial high, stop hunt to other high, break of market structure, all right, which gave us other block. Then a return to the other block confirms an entry for a sell. Then take profit will be targeting this liquidity here, this low. So price proceeds from here, take out this low, you take your profit. This is another chart showing short-term trading setup. This is a 4-hour time frame GBP USD. We have equal lows. Equal lows. Price traded right up. All right, created a high, initial high here, then return back down with a stop on to take out this equal lows. Take out this equal lows, then break of market structure, breaking this high, break of market structure. All right, then we'll have an order block at this point. The return to the order block confirms the entry for a buy with your stop loss minimum of 10 pips below here. You buy when market trades into the order block, then you move the market high, targeting this liquidity here being taken out. So that's where your take profit will be when price takes out that buy stop liquidity. All right, now this is what we have for a short-term trading higher time frame setup. It gave us a very clear entry, setup, and entry all at the same time on the H4 time frame. Now the build-up of all this even at this point where you have this other block here, we're going to look at this setup here on 15 minutes time frame. On 15 minutes time frame, this build-up here is everything we have here. All right, that covers it. Now let's look at this on 15 minutes time frame. 15 minutes time frame, it gave us an initial low. All right, stop hunt, break of this structure, break of market structure. All right, order block, a return to order block gave us an entry. So a return to order block here give us an entry for a buy here. Your stop loss about 10 pips below this. All right, but you can see what I mentioned about taking entries on order block. Most times I do a pending order about 3 pips before the order block, and I do 50% into the order block. So if I've done that, price would have still taken me in here on another entry, or with the same stop loss below. And when price moves eventually moving going up, all right, I'm target my take profits here when this high is being taken out. Okay, so despite the activities the market did all here, all right, this trade still remains valid because my stop loss is right here, which was not taken out. All right, that was for short trade. Then for day trade and scalping, those who scalp, who do a lot of scalping, all right, let's look at the setup we have here. This is a 15 minutes US 100. Let's look at the setup we have here. We'll have initial low, all right, break stop hunt, break of market structure here, which gave us an order block. Return to order block here confirms our entry for a sell. Return to that block here confirms our entry for entry for a buy. We'll have the first buy entry here. The first buy entry here with the take profit for that buy targeted around here. Here, the first take profit is there. Then when price went up to when the first trade hit the take profit, all right, price returned back down. Now, how they have an initial low here from the first entry, then this movement down took out the liquidity. So there's a stop hunt here. Then we'll look for a break of market structure. Break of market structure. Do we have a break of market structure here? Yes, there's a break of structure when this high was taken out here. So this is a break of market structure to the upside. Then we'll have an order block. The wick of this candle here represents an order block. So return of price to this order block give us an entry. Give us an entry for a buy. So we have a second entry for a buy, which was issued the moment it was issued after the first entry must have hit take profit. So once set up within a space of 24 hours for scalpers, you have the first entry, take profit, hit, market returns, give a stop hunt, break a market structure, return to that block, gives you your first entry. It will give you your second entry, which will have the take profit to be above this high when this high has been taken out. The moment price takes out this high, that is your take profit. That is a good entry setups for a day, and trader will end up smiling to the bank. Here we have yet another setup. What are we doing today? We are going through multiple setups. Everything will be learned from the different series. We've gone through the different series of the inner circle trading strategies, talking about break of market structure, order block, change of character, failure swing, all right, confluence of signals, putting a lot of signals together, different setups, both for swing traders, for short-term traders, for day traders and scalpers. This simply tells you that if you understand this effectively and apply it diligently and with discipline, all right, you find out that you hardly have a losing trade. You hardly have a losing trade. Even if you do, they are to the barest minimum because there isn't a very tight stop loss. Because what you're doing here are sniper entries. What you're taking here are sniper entries. All right. So the aim here is to trade profitably. That is exactly what we are guiding you to do. All right, look at what we have here. This is another scalp strategy here. The first thing we have here is the Asian range. We have the Asian range here. Then the London Open. During the London Open, we have equal lows in the London Open. Then price traded up into the New York Open, taking out the initial high of the day that was created during the London Open, taking out the initial high. Then price returned back down, then took out the liquidity of the equal lows created during the London Open, took out that liquidity, then break of market structure. We have break of market structure here. Then we have an order block. Here. So a return to the order block, break of market structure. You have a break of market structure, a return to the order block. That gives you your entry for a buy. Gives the entry for a buy right on when price tapped into the order block. And if you take profit, you target this high as take profit. So when price eventually trades, or the moment it takes out this liquidity, you hit take profit for the day. Daily checklist. Now, these are the things you do as a trader every day when you wake up before you start trading. Are things you ought to do. Remember, as a trader, you must not trade every day, but you have to show up every day. That does not mean you're going to trade every day, but you have to show up every day. The first thing you do, you check check for upcoming high impact news for the day. And how do you check this? You go to websites such as forexfactory.com. All right, investing.com can give you the same information. Forex Factory offers that also. Then when you get to forexfactory.com, what do? When you get to forexfactory.com, you check the currencies for the day that has a high impact news. Today is 22nd, Tuesday, 17th January 2022. These are the currencies that has high impact news for the day. That has high impact news for the day. And exactly 2:30, all right, 2:30 today, Canadian dollar and US dollar has a high impact news, all right? And this is you doing your fundamental analysis. You've done the first job or the first assignment for you as a forex trader. Look up for the upcoming high impact news for the day. Then secondly, you open up your chart of the currency pairs you intend to trade. You start mapping out your key levels, starting from your order blocks. You start from your Daily order blocks refined to as low as even 1 minute order block, depending on the entries you want to take. Then you use the key levels, the higher time frame key levels for your lower time frame entry. Practically, let me show you what you do here. Okay, now this is excuse me, this is the Euro USD 1 hour time frame. 1 hour time frame, go down to daily time frame. I want to identify and map out the other blocks I have here. So this is me working on my other blocks. I've done my Forex Factory. I've taken note of the currency pairs that has high impact news for the day. So I am identifying my key levels. Started from a higher time frame, daily time frame. Now, once I'm done identifying on daily time frame, I will refine to 4 hours time frame. From 4 hours time frame, I'll refine to probably 1 hour time frame. Then I'll look for my my entries from these time frames. All right, what am I doing here? I am identifying my other blocks. Good. All right, I'm done with the daily time frame. I move over to my 4 hours time frame. Going to 4 hours time frame, I have to refine from 4 hours to refine these other blocks down to the 4 hours time frame. Right, if you know exactly what you do, you don't waste time doing this. Trading is the trade is fun. Trading the forex market is fun. It's fun. It's actually easy to make money. Easy to make money once you've taken your time to go pass through the education. And the only way you can pass through the education and be good as this is when you practice as often as you can. That is why in the course of every of my training or class session I take, I emphasize on practice. Because the truth remains is that no matter how good your instructor is, no matter how long you you sit under the voice of your instructor, if you're not practicing, you can never be good at this. That is just the truth. That is the truth I tell everyone. If you're not practicing, you can never be good at this. You can't be good at what you do. So for you to be good at this, you have to practice as often as you can. For you to be good at this, you have to practice as often as you can. All right, here I am on the 1 hour time frame. So on 1 hour time frame, I'm also trying to refine the other blocks from the 4 hours to the 1 hour time frame. Then also see how to apply them effectively to look for possible setups, possible entries on my 1 hour time frame. So I'm going to be looking for entries on my 1 hour time frame. Now, once I'm done with refining these other blocks, I look for entries immediately. Right, this is already the New York time for the New York Open. This is 29 minutes after the New York Open. This is 2:49 p.m. GMT plus one. 2:49 p.m. GMT plus one. So the New York Open is already on. Once we are done with it, we can see how to secure a quick entry. All right, so as I'm refining, I'm also able to identify some other blocks which I was not able to see from the higher time frame. This is what we have here. All right, now looking at this chart here, I want to show something very quick. Look at this chart here. This is we have equal highs. We have equal highs here, and price has already gone to take out the equal highs. So liquidity, the stop loss has already been issued. Equal highs has been taken out. Equal highs has been taken out. And once the liquidity was taken out, the reference and other block, this is the other block it's reference. and mitigated that particular order block. So let's look for a break of market structure. Yes, we have a break of market structure. Now let's see if we have an order block the price will return to. Okay, there is an order block here. Oh, there's an order block here which price has already returned to. Fantastic. Price has already returned to this order block, and that gives us an entry. All right, thank God we are not that late. Here we have an entry for a sell here. Entry for a sell here, and selling from this point, you target your profit because prices has already mitigated this particular order block. All right, price has already mitigated this order block, so we're looking for look for an entry here. Look at what happened. Price moved from this order block is yet unmitigated, went up, then mitigate this order block here. When we mitigate this order block, we needed a flip. All right, we needed a flip for this order block to take a trade from this point. Then when this happens, this is the flip we needed. All right, this is the change of character flip we needed, and that confirms that. And so without much ado, without wasting the time, I can actually pick an entry here for a sell. All right, I just sold at this point because I was not there on time when the entry made, but I'm not too late actually. Sold from here, my take profit will be here. So I'm having a take profit of $45, 45 pips take profit right top of this other block with about $7 in profit because I use a minimal loss size of 0.01. Then for my take profit, my stop loss, I have my stop loss right above here, above this previous high as my stop loss. So having a stop loss here of about 35 pips stop loss here. So my reward risk to reward ratio here is 1:2. 1:2, which is not actually a bad one. So this is a valid setup and entry. Valid setup and entry. And look with this, look at what is going to happen here. There is a fair value gap here yet unfilled. So look at exactly what I'm expecting to happen with this price build or price setup. I will expect this to happen. Price coming down to fill this fair value gap, then trade into this liquidity. So trade into this other block, then give us a 50% Fibonacci retracement, then make all the way down. Okay. Now in less than 5 minutes, what have I done? I've simply done my daily checklist. All right. In less than 5 minutes, I've opened up my forex factory, done my fundamental analysis, checking the currency pairs that may have high income news for the day. Then I picked up my chart and I marked my higher time frame key levels. Now, after doing that, what else did I do? I simply refine my key levels, talking about my other block down to lower time frame, down to a lower time frame. Then after that, what else did I do? After that, I refine my lower time, my other blocks to lower time frame, get entries. And the entries here, I can see the equal highs. After the equal highs, there are break of market structure. Break of markets. After the equal highs here, here are the equal highs. Then stop points, which took out the equal highs. All right, break of market structure, return to other block, then I sell entry to take my profit down here. Okay, very tactical and crystal clear setup we have here. Okay, back here, this is what we just took care of. Now, in rounding up, we're going to be looking at some trade setup as we round up. We're looking at some trade setup, some marked up charts in a couple of minutes as we try to round up here. This is a chart of Euro USD. Let's look at what we have here. Initial low, stop hunt, a break of market structure, return to order block. Okay, now look at this. Let me explain this chart clearly. After the stop hunt, in the movement to break market structure, a fair value gap we have here. The structure was broken, market came down, filled the fair value gap halfway, did not fill it completely, traded up again, created a high, then returned to fill the gap, then traded into this other block. Trading this other block confirmed an entry for a buy, targeting your profit, with your profit targeted at this high being taken out. All right, so even after this happened, we'll have this, all right, we'll still have the high being taken out, and that is where you have your take profit. Then whatever your stop loss is below here. So even when we are having these swing lows, all right, your trade still remain valid. Your stop loss was right below here. One key thing every trader should have is patience. Patience is virtue, a virtue you need as a forex trader. Here you have an initial low, an initial high here, stop hunt, break of market structure, return to order block, the move for take profit here, all right? So that is it. Return to order block, your entry for a sell, will take profit at this point when this low was taken out. We'll have this again. Initial high, on that high, which was not taken out, this gives us failure swing. Failure swing. Now, if confirm a failure swing, it must be a break in structure, break of market structure here, return to order block, confirms a sell, then price move down to take out this low as your take profit. Another setup again. Initial high, stop hunt to confirm the stop hunt, break of market structure was taken out, break of market structure, return to order block, return to order block. Now, before this break of market structure, I want us to say this. Now, the cost of price breaking the market structure, it left fair value gaps. Now, these are gaps that needs to be filled. Now, because of these gaps filling, that is what we return price. That is what we return price back after the break of structure. The other fair value gaps that needs to be filled, that's what we return price back to the other block. And the return of price back to the other block was at the point when the last gap was filled. Like I said, if I'm to play this, that's how I'm going to play. I'm going to take an order for a sell, 2 or 3 pips before this other block. My stop loss 10 pips above here. Confirming my entry for a sell. This picks up my order. My take profit should be right below here. Of my take profit, when price moves down, at the point when this low is being taken out, I have my profit hit. Now we can see that it is quite easy to make money in the forex market. You only have to be able to read your charts carefully. Take your time, read your charts. Make sure that every setup is crystal clear to you. Don't be in a hurry to buy. Don't be in a hurry to sell. All right. Don't be in a hurry to buy. Don't be in a hurry to sell. Once your setup is crystal clear to you, once you understand the setup effectively, every rules apply to your rule of engagement, your rule of trading, you hit the plug, you pull the plug and make some cool money for yourself. Here we have a equal lows, stop hunt, break of market structure. And the break of market structure here, fair value gaps. These are gaps that needs to be filled. Now these gaps that needs to be filled is what brought price back down. We have another block here. Price came right down, filling these gaps, then tapped into the other block, confirming an entry for a buy. Your stop take profit is right above here with your stop loss, couple of pips, 10 pips minimum below here. And when price moves up, the point of this have been taken out, your take profit is being hit, and you smile to the bank. Yet another entry showing the same. Another entry here showing the same trade build up. Now, what have we been able to do here? We've been able to simply open our eyes to the possibilities inherent to the forex market to show you the reason why smart money traders, institutional traders make money and retail traders lose money. Now, what we are exposing to you, the strategy, the sniper entries, the setup we are exposing to you is different from what everyone out there know. And that is what makes us winners in the market. That's what makes us who we are. That's what makes us better and better and better than everybody out there in the financial market. Here is another build up. See, higher highs and higher lows, giving us continuous break of market structure to the upside. All right, then here we have a failure swing. The failure swing, to confirm the failure swing, you have a break of this structure. Confirm the failure swing. All right, this is the same. This is your change of character. This is your change of character, which simply means a move to the downside. Right, but in the build up going up, we get some very good entries even in the build up. Higher high, higher low. Other block, break of structure. Return to other block. We have our first entry for a buy. We have here, this high is your TP1. TP1 here. Then price moves. Price moves up, gives us the TP1 profit is being hit. TP1 profit taken. One profit is taken. Price returns back down. As it returns back down here, what we have here is a failure swing here. A failure swing here. To confirm the failure swing, there has to be a break of market structure. So we have a structure here. So break of market structure, return to other block. Return to other block here. We have our second entry confirmed. Second entry, then your TP2, your take profit is right above here. All right, so at the point when this happens, your take profit has been hit already. Very strategic and concise setup. Now, this is not magic. It is simply being able to read the chart effectively. All right. Simply being able to read the chart effectively. Here's another build up, uh, previous low. See this? Stop hunt. Now, in making use of this setup, stop hunt, break of market structure, return to order block. But at most times, there are times when the setup may not give you an order block. There are times when the setup may not give you another block, but it may give you a level of Fibonacci. Like if you still look at the setups here, these are entries. These are entries. There was no other blocks for these entries. All right. But these entries simply coincide with optimum trade level Fibonacci entries. All right, let me show us this in the chart. Let me use a chart to explain this. All right, I'll simply use a chart to explain this. This is a chart. You have all right. Now looking at this chart, you can see all right. These are break of market structures. Okay. Now, looking at the entry from here, from this low to this high. Look at where we have the other block. I see that price did not get to the other block. But when you use your Fibonacci, you can see clearly that the point of entry here is at 62% Fibonacci level. This confirms your entry here for a buy. Then take profit above here. When this particular high is being taken out. All right, then see another movement, another move. Now yet another move from here to here. All right, though we'll have other block here. I think for this particular one, price actually respected the other block. Okay. Here we'll have equal lows. The return to that block confirms an entry for a buy. Now let me show us the equal lows. I'm going to expand this chart a bit. Equal lows. Stop hunt. We have a structure here. Break of market structure. Okay, sorry. When I explained it, I got this very wrong. Here we'll have it. Yeah, this is it. I have equal lows here. stop hunt. What the structure here? So break of market structure. We have an order block here. So the break of structure, return to order block. Confirms a buy entry. The stop loss right below here. Minimum 10 pips below here. Then take profit targeting this particular high here. So my take profit will actually be within this candlestick here. That's my take profit. All right. So most times when you see build up of setup, you may not see an order block for price to return to, but in the place of another block, you may find a Fibonacci level. A Fibonacci level, which might actually stand as your order block being returned to. So here we have the initial high, stop hunt, break of market structure, return to order block, confirming a sell, then price move down, take out this low. This equal lows here as your take profit. All right. So what have we done? We have succeeded in opening our eyes, showing us different and multiple marked up charts that apply all the strategy we talked about. All right, combining these setups, stop hunt, break market structure, return to other block, you take the trade, target your profit at the next high or the next low. Then failure swing, break market structure, return to other block, then target your profit at the previous high or previous low being taken out. Simply combining setups, simply combining setups to get good trade entries and good trade opportunities. All right, so every chart you see here, the same thing, the same point being noted. All right, everything falling into place. Now look at this last one here. This one gave us 2 entries, initial low, stop hunt, break of market structure, one other block, return to other block, first entry, return to other block. The first entry, TP1, the TP will be here. All right, the TP will be here. Return to other block, validates your entry. Okay, now what again do we have? Look at this here. This is another low. This is another low. What do we have here? Failure swing. Stay yet while the first entry trade is still in motion. To confirm a failure swing, there has to be a break of market structure. There was a break of market structure at this point. All right, we have the other block. The return to other block. We have our entry number 2. And the same place we have TP1. We have the second entry has this take profit there. So when price did this, all right, profit has been hit for 2 entries. So most times we can scale in your entry, maximize profit by using the same setup to get. There are times you might even get up to 2, 3, 4 entries in one trade build up or in one setup at once. All you need to do is to have an understanding of how to read the charts, then apply the strategies effectively as they build up. All right. So at this point, I believe we've done justice to powerful setup, talking about the turtle soup, which is the movement to take out the existing liquidities, either for the buy stop or the sell stop liquidity. Then looking at the daily checklist, what you do every day as a trader. Also looking at how to combine setups or a confluence of signals. You have a combination of stop hunt plus break of market structure plus return to other block, or failure swing plus break of market structure, then return to other block. Now, the key to all of this is patience. Key to all of this is patience. If you are patient as a trader, forex trader takes money from the impatient and gives to the patient. So a patient forex trader is a profitable forex trader. Once the setup is clear, my dear, take it, put the plug, and smile to the bank. All right. All right. See you some other time. I remain your trainer, Prosper Okonkwo. Trade profitably with FSPG.